All right, welcome to this edition of Bitcoin Brief. It is Tuesday, September 8th, and we have a great show ahead of you today. We have Giacomo Zucco joining us on this round. Very great to have you on. Giacomo is a
Thank you.
Bitcoin educator, consultant of B Academy. Thanks for joining us. And we have Tone Vays, of course. Tone Vays, our educator as well as consultant and trader. And host of the Financial Summit. Giacomo, thanks for coming on. Oh, and I'm Christine Lee, a journalist.
Oh, shit, that's my bad.
Facing your host today.
There
we go. So Giacomo, what's going on? Catch us up with what you've been up to.
So we will probably discuss the latest news about my activity that consisted yesterday and the day before just in fighting people on Twitter. So this will probably be discussed.
How is that different? How is that different than your last 3 years of your life?
That's a good point, actually. Probably it was, there is a hierarchy of people that trigger me more and less. So that yesterday and 2 days ago were probably high in the hierarchy of triggering. But except for that, I'm basically doing a lot of e-learning stuff right now. So I'm missing a little bit physical interaction and physical classrooms and seminars. I guess that we will start again next year also with the conferences like Unconfiscatable and Understanding Bitcoin. I was last week at the Frankfurt conference in Unchained.
Oh yeah, how was that? I was supposed to go there, but I can't get into Germany. They won't let me in. So
many speaker had this problem. It was, let's say, very intimate because of course logistics was a problem. So not a lot of people, but it was well organized. The organizer took a huge risk, so I really respect him for that. And it was mostly, I would say, mostly scam free. The attendee were like sponsors, and attendee were a little bit scammy, but most of the speeches were actually very fine.
How many people attended?
I'm not sure. I think it was probably under 70 or with all the turnover.
Oh yeah, because it was also bad timing. Is BitBlock Boom was on the same weekend. They need to do that better.
But that was not really bad timing because nobody from Europe was able to go.
Oh right. No one from Europe. I know no one from Europe could go to BitBlock Boom. No one from US could go to Europe. But
yeah,
when these things were being planned, I had a problem. Before COVID, I had to choose one, and that was bad.
Yeah, exactly. In this case, there was not physical overlap. The only overlap maybe was in communication over media. But the other thing is that the guy decided not to do live stream because if they in the live stream, there are some people without the mask and stuff like that, there could be trouble. Because inside the conference, it was very free, very quiet, and nobody was paranoid.
Oh yeah, because you guys are in Europe and we were in Texas, so not what's going to happen to us. But over in Europe, it could be a little different.
That's a huge difference. Actually, the regulation in Germany was kind of chill for all the time, but it started to really increase in level of strictness exactly during the conference. My seminar, which was on the Monday after the conference, had to change place at the last minute, and it was a huge mess to get people informed because regulation basically got stricter just after the conference. So it was challenging, but really it was interesting. The good thing is that together with BitBlock Boom, this was the first conference after lockdown, and Unconfiscatable was the last conference before lockdown. So basically that was, I was at both, which is very, very nice.
All right, great. Well, it's good to see things start, reopening again. Tone, how are things with you?
Good. I just came back from BitBlock Boom and I was out in California. It's everyone makes fun of California and how crazy they are with the mask. It's not that bad. You can people are getting really fed up. All right, we got to move on to the topics. We have limited time.
All right. So let's start taking a look at some of today's headlines, this week's headlines. Start screen share. Here we go. All right. We've got some fishy business over the weekend. What happened to the 1.2 billion DeFi protocol Sushi Swap over the weekend? So we saw that Sushi Swap investors were handed a raw deal over the weekend after the pseudonymous founder of the 1.3 billion, 1.5-week-old decentralized finance protocol cashed out. Now, this this to me feels like the ICO days. People are copy pasting code, creating their own protocol, and then pumping, dumping, cashing out. What are your thoughts, Giacomo?
Yeah, it's basically the same cycle with new terms, with new narrative on top. The basic mechanism of most of the so-called crypto industry is literally a Ponzi scheme. So it's people buying something overpriced in the hope that somebody else will buy it overpriced because they just follow the FOMO, and then they sell on top, and they will keep the narrative going until it collapses. That happened with ICOs, and this is happening with so-called DeFi, which is mostly that. It's not that decentralizing finance itself doesn't make sense. It does. For example, BSQ is a decentralized finance because it's a decentralized exchange. In a way, joint market is decentralized finance, is a decentralized application to give liquidity to CoinJoin. Lightning Network itself is decentralized finance. There is a lot of stuff in decentralized finance, but the meme DeFi is basically used to cover a new hype, a new wave of Ponzi schemes. And I'm really always very surprised by the surprise when somebody after a while will just pull the plug and get out with the money, just as it happened with most ICOs. And I mean, the thing here is that you see now people encouraging this stuff after the crash of some major example will actually take distances and will try to distantiate themselves reputationally. Like when Vitalik was basically advising the DAO and putting his face on the DAO fuck up. Then when it crashed, they started mocking ICOs and DAOs, and they started like distantiating themselves from this. But this is the same thing. I think that the first cycle, there have been a lot of small cycles, but the first big bubble of crypto nonsense was probably the first altcoins, which compared to current standards, they were basically not even that fishy. Sorry for the pun about sushi, but they were kind of normal Bitcoin clones. Then we had the wave of the tokens on top with the utility tokens and the ICOs, and now we have this yielding DeFi. Sushi is not even the only crash. You also have Yam a few weeks before. So now you are seeing rationality and fear coming in, taking place of the fear of missing out and the exuberance.
Yeah, Giacomo, but the Yam was very different. The Yam was a technological screw up. The Sushi thing is just an outright exit by the founder. Now, it doesn't really matter why your value went to zero. We always say that your shitcoin project, anything but Bitcoin, will always have both greater technological risk and greater just scammy from the start risk. And we saw both examples already that are notable.
True. This is way simpler than Yam. Yam was an overcomplicated scheme that eventually fails. In this case, the guy was, relatively speaking, honest, because he just said, give me money. And they did, and he just took it. So in a way, it's a scam, but it's a quite honest scam in this way.
And it's kind of funny how he's using like Charlie Lee as his, notable example of why what he's doing is honest. And here's the thing, right? Like, I honestly don't feel bad for Charlie, because by Charlie doing what he did, he set a precedent that people can now say, I'm doing a Charlie Lee.
Sure, but not only. I mean, in the case of the sushi cook, the sushi chef, it was also even more obvious that was a risk, because it was also pseudonymous. Charlie has a reputational risk when he does what he did. So there is at least the fact that if somebody with a name and a face will sell everything, there will be some kind of reputational consequence. When a pseudonymous guy with an identity created only for this money grab does sell, I mean, what did you expect? It's like is really like people sending money to the Twitter hacker and really expecting to get it
Well,
back double.
I can tell you what they expected. They expected to get out and take their profit the day before that tweet. Like that's what everyone expects. Everyone expects to get out right before the Ponzi blows up, and they all know it's a Ponzi. At least most people do, and they just missed it. It happened too soon for them.
Absolutely true.
Oh,
Hi,
we
Jimmy.
have Jimmy joining us. Jimmy Song.
Oh, Jimmy's here.
We're talking about Sushi. If you want to weigh in on this, we saw that the founder, he basically copy pasted protocol and created the Sushi from Uniswap and created the Sushi token. He cashed out over the weekend after saying he was going to, wanted liquidity. People bought into this liquidity token on the platform, and now he's 13 million richer, and nobody knows who this guy is.
Yeah, and this is what happens when you have Bitcoin envy, right? All of these people that quote unquote invested into Sushi really were jealous of all the people that were into Bitcoin, from 5, 6, 7 years ago. So you make bad decisions when you're acting out of envy, and I think that's basically what happened. This particular guy is obviously a con man. And deserves all of the trouble that he's going to get. I have no idea who this person is, obviously, but there's a lot of people motivated to find out who this guy is, and it's hard to you may think that your privacy setup is really great until you have like 10,000 people coming after you and trying to figure it out.
Well, CZ should know who that is, because when CZ couldn't wait to list this and all the other DeFi scams on their platform, and he tweeted out something that says, before we add one of these DeFi projects, we get like KYC info from the founders, and then he backtracked on it like the next day saying, oh, we don't know who it is, we just list the projects.
Well, we'll see. Somebody's going to find out, and it's going like, you don't screw over a lot of people and get away with it that easily. So yeah.
But technically, he didn't actually like do anything illegal or anything. Like, he didn't actually do anything that he's not allowed to do.
Yeah, this is true, and that's I don't know. We'll see.
Like I said, people are just pissed they didn't get out before he sent that tweet and took his money. That's it.
Yeah, it's basically, I didn't get out fast enough in this Ponzi scheme.
Yeah.
So I'm sure a lot of Madoff people are upset for the same reason.
What the guy did is basically what Vitalik Buterin called responsibly financial planning.
Right. Responsible financial planning. That's right.
All right. Well, moving on to a similar story, we've also got Binance announcing that they're unveiling a new product for yield farming crypto assets. So the popular cryptocurrency exchange Binance has released Launchpool, a way for users to make income by staking tokens for so-called yield farming. This seems that like, a transition for a good transition into showing how another use for this popular cryptocurrency exchange Binance. Giacomo, do you want to take this one and say, what are your thoughts on this development?
Well, yeah, I have very mixed feelings about Binance, because in a way, Binance is enabling a lot of this confusion about scam coins and stuff like that. Binance is leveraging the confusion in the so-called crypto industry. But on the other way, stuff like the Binance chain or this internal Binance DeFi are basically reverting back to a pure centralization, which is actually showing up that this stuff are actually centralized. Even stuff like MakerDAO is centralized with a centralized price feed, and even most of the stuff that are called DeFi are actually absolutely CeFi. They are completely centralized, just in a way that is very, very obfuscated and convoluted. So in a way, I think the more honest way to do strange, creative financial scheme would be to just do it on your centralized database, the way like Bitfinex were doing, like the BFX token, or the future on Bitcoin Unlimited, or the or for the hacker that robbed Bitfinex, they issued a token that gave part of the distribution of the recovery of the funds. So if you want to do something creative, or Leo token, which is basically some kind of strange revenue sharing mechanism, which is almost a share but not really. So when you want to do something like that, which is already quite creative financially speaking, and could be a little bit scammy or a little bit shady, then I think it would be better not to add on top of that a fake decentralization circus. So Bitfinex did it very, very clearly with centralized servers. In the case of Binance, I think they are creating a decentralization circus, but it's so poorly made that basically I think it's clear for everybody that this has nothing to do with blockchain technology or stuff like that. It's basically just what companies like BitMEX already do. You just have unregulated or loosely regulated financial contracts that may be in a way like a territory in between gambling and actual financial contracts, and you just do that mostly leveraging your infrastructure, which is basically centralized, and you control and you can shut it down. I'm not actually learn about the details, but as a general heuristic, from what I know, I'm 99% sure Binance can actually shut down these contracts, and everybody participating in them are pretty much aware of this. So in a way, I would say it's an improvement compared to Ethereum.
Wow, interesting insights. Jimmy, you want to weigh in on that?
Yeah, so I mean, I think Binance saw just how much of a pump that that Ethereum got off of all the yield farming stuff. There were literally like 100 projects, most of which came down like 80% in like one day because they were all Ponzi schemes. So this is kind of like going. Like this is like way late to the party. The DeFi yield farming mania is already over. So in a sense, they're maybe hoping for a second iteration of something like this or whatever. What's really bad about this is because it's just so completely centralized, right? Like with Binance, it's literally just Binance that gets to call the shots or whatever. I can't wait until they have some Ponzi scheme on there and they basically say, error, you cannot sell this asset or something like that, and make it so that the price literally can't go down because no one can sell. So we'll see what happens there.
It's interesting you say that, Binance will control this, because in a way, Ethereum is a very centralized token as well, controlled, but it's more murky as to who that is. Is it Vitalik? Is it, which are the people that control it? Tone, you want to also add? Also, I'm going to point to this other article. Binance launches clear competitor to Ethereum in push to lead booming DeFi market. Go ahead, Tone.
Yeah, so Binance, basically CZ, ever since leaving his CTO role at, what was it, OKCoin back in the day in China, basically he's just sticking with the latest trends to get richer and richer and richer. It's slightly different path than Justin Sun, but like on a similar money hungry, what can I do to maximize my personal profit? And they obviously did the ICO thing. They built the exchange. They came up with this ridiculous utility use case for their token to save money on fees. And now he's just trying to go after the concept of Ethereum. So Binance has one job. They have one job: to raise the price of their Binance scam token. And now that they're offering people discounts to use this token on their exchange, what's the best way for them to continue pump the price of their Binance token? And the best way to do it is to have give people an incentive to lock up that Binance token. So now they're just trying to come up with a platform and convince these DeFi projects. I mean, there's nothing DeFi about them. It's you lock up something of value and we will just pay you in our Ponzi money for locking up that value. So there's no reason why CZ can't take the lead and convince people that they should be locking up his Binance token in order to earn Sushi token, or I don't know, Steak token, or whatever the hell anyone else invents. So this gives CZ money because people are locking up that token. They're not even using it on his exchange. No one is going to be selling it. And there you go. And he wants to even have a platform to do that. And Giacomo's right. At the end of the day, none of these projects need a decentralized blockchain underneath them. And it is going to move from Ethereum to Binance, because if it's a centralized underlying database like Binance, it can lower the fees because you don't have to pay the Ethereum gas. And if you go one step further, that leads us, I'm going to lead us in right into the next story, Christine, where it's going to move right on to AWS. And this is something we said on the show before Binance even existed, going back to the World Crypto Network days, where eventually Ethereum will be replaced by Amazon Web Services, because you don't need Ethereum to create your dumb DeFi project. There is nothing decentralized. You're just taking on the underlying database risk. And the same thing goes for INX. Like you're taking on the underlying risk of the Ethereum blockchain when all you have to do is use a database like AWS.
So that headline, Tech Mahindra, which is a Indian tech giant, is offering blockchain solutions on Amazon Web Services. They announced this Monday. It will offer blockchain solutions built on Amazon managed blockchain to global customers using Amazon Web Services. So Tony, you've been saying this for a while, that Amazon Web Services is a better Ethereum. And you guys want to, do you want to weigh on that further?
Me, no. I'll hand it off to Giacomo.
Right. Giacomo, go
Yeah,
ahead.
well, basically, this is also very connected with what you said before, Christine, that Ethereum is centralized, just like Binance, but is a different kind of centralized. Ethereum has at least 3 levels of centralization. The first one is software development centralization and architecture design centralization. So there are few people calling all the shots about the way the project is evolving. And since the project is unsustainable, if not evolving, so there are difficulty bombs, unscalability, so you have a guarantee that it must evolve. It cannot really stabilize. Like Bitcoin could actually, I hope that Bitcoin will evolve with Taproot, etc. But Bitcoin right now could stabilize, could actually ossify as the base level, and we will probably still be fine. In Ethereum, you cannot literally stop developing, because if you do, you will have, for example, the difficulty bomb exploding. So you need a coordination of developers. So there is a strong centralized coordinated group of developers, and they call all the shots. For example, they called the shot about the DAO bailout fork, changing the consensus in order to refund the people that made a wrong investment. They called the shot about basically anything. I remember also Vitalik and other people saying that they will call political shots. It's like if Nazis will use Ethereum, they will find a way to fork them off or something like that. Or proof of stake. If somebody will abuse proof of stake, they will just blacklist them. So it's a very centralized project from the point of view of development. But the second point of view is also the infrastructure and the culture. So it's not just that, like the first level is Bitcoin had Satoshi disappearing. And so now there is not actually the Bitcoin guy. There is not a Bitcoin master. If we will talk about this later, but if Vlad is the actual core maintainer is not agreeing with the community, there will be a huge clash. While in Ethereum, there is not that. There is just one living founder with a name and a surname, easy to manipulate, easy to co-opt. But the second level is also that people cannot actually verify the supply directly. They cannot run a full node, even if they change the definition of full node. People cannot easily run a full node to verify rules on a normal machine, on a normal network, especially in worst case scenarios. So basically people will just follow centralized solution like Etherscan. When Bitcoiners were asking Ethereum people, how much is the supply of Ethereum? Their answer was mostly just check on this website. I mean, what do you need? your node for. Just check on the website. So there is a infrastructure centralization. And the third level is connecting the two. Basically, the same guys that are driving the protocol development, so basically the guys around consensus, they are also running the only infrastructure which is actually running some quote unquote validating node, which is called Infura. So basically there is this infrastructure provider all in cloud. Literally nobody is, or figuratively nobody, practically nobody is running validating node outside the Infura infrastructure, which gives you a level of control which is even deeper than just influence of the centralized development team. It's even, I mean, Infura guys, they can practically change stuff in the bare metal machines that are running these nodes. The security of it, you know, the sentence, cloud computing is just somebody else's computer. In this case, Infura is just consensus computers, and you are using them. So as Tom said many times, it's just a good evolution that if really people, I mean, I don't know why you would run blockchain stuff, which is by definition something that you should be able to validate independently on top of a cloud network. But if you do, maybe just use some mainstream reputable infrastructure provider like Amazon. I mean, do you trust a startup like in Consensus more than Amazon? I'm not sure I do. So it's maybe a good evolution.
Thank you, Giacomo. Jimmy, just quickly, is AWS a better Ethereum?
I don't know if it's a better Ethereum. I know AWS is very useful. Ethereum really isn't. So I think it's way better than Ethereum in many ways. But this story to me is just corporate PR, complete BS, like nothing burger. It's a lot of these companies offer quote unquote blockchain solutions that don't mean anything, and it's for CEOs to say, oh, we have a blockchain now, and that can I be considered hip? Please market. It's kind of one of those ridiculous offerings by these consulting companies that are really massaging CEO egos. So, you know, that's what this seems like, and they're based in India. So surely it's to compete on price versus the more expensive consulting companies in the US that are charging probably 10 times as much to do pretty much the same thing, which is stroke CEO ego. So, you know, a cheap CEO can go and hire these guys instead of, I don't know, like Accenture or something. So it's a sad commentary on the rent-seeking capabilities of consulting companies in this economy.
Okay. And we're moving on because we may lose Giacomo in the next few minutes, but he accidentally set crypto Twitter on fire over the weekend with
I'm
this
not sure
tweet.
it was an accident.
So it began with Ben Verrett, a Bitcoin contributor, saying, all right, guys, I fixed it. Revert, change blacklist to blocklist. Giacomo tweeting, political signaling is creeping into Bitcoin core development too. So far, still limited. No contributor or contribution banned for wrong thing for now, or worse yet, approved for quotas like in other software projects, but sad and potentially dangerous. Giacomo, take it away. What did you mean behind that?
So it was kind of incidentally, because it's true that I made this tweet that was quite provocative, and like it was concerned. It was a sign of preoccupation for this topic. But if you look at my timeline, that's just what I do all the time, every day. I take a topic which can go from Bitcoin to whatever, to mathematics, to ethics, to politics, and I just tweet out something controversial. So most people, some people is mad at me because they think that I managed to coordinate some kind of global effort about this topic, but that's not the case. I didn't coordinate anything. I just tweeted out what I thought, just I do about every topic. This particular topic evidently just resonated very differently with the community, with the larger community, and so it created more noise. So what happened basically? This PR, this commit is actually 3 months old. Some guy created a GitHub account with the only, without any contribution on it, with the only goal to change a variable name inside the Bitcoin core repository, a very useless variable name, not impactful, not important. It was a Python test suite, so nothing important, and it was an internal variable, not even showed on the UX, so it was completely irrelevant. This guy created a GitHub, or guy or girl or whatever, he created a GitHub user just to make this change, claiming that the word blacklist, which is a word about black intended as absence of confirmation, you know, white list, blacklist, white market, black market, white spot, black spot. It's
right. It's meant as visible versus not visible. Well,
exactly. Visible versus not visible. So absolutely never had in any language any connection with the concentration of melanocytes in your skin. So it doesn't really, it's not related at all with the level of melanin in somebody's skin. Following this kind of mostly US based fashion right now, they are some people are going around shopping easy cloud points by changing completely innocent and normal words that may be rate connected with some kind of racial issues, which is completely unrelated, and they change it, and so they can just show off that they are very sensitive because they are changing random words. So if you do that in Bitcoin, for example, you can say that blockchain or time chain includes the term chain, which is for sure an object that were used to enslave people in the cotton fields. So you can, I mean, I can go on all day with some stupid example. So these guys, this guy or girl made this contribution 3 months ago, and a Bitcoin contributor said, okay, this is not so bad, but if somebody sees this, there may start a huge controversy. So in order to avoid the controversy, we will just accept it immediately. So we're safe, so there will be nobody protesting. And I think that was a huge mistake, but nobody really noticed. Like John Carvalho and a few other people noticed this. They were contrariated also because one guy made in GitHub you call it NAC, so not acknowledged. I don't agree. So this guy said NAC, and the repository maintainers, they rushed the commit in even with a pending NAC, which is something that you usually don't do in a critical open source software out of etiquette. If you have a contributor saying NAC and you don't rush it in a few hours without discussing. So it was the reason the core contributor did this, the core maintainers did this, was to avoid discussion. And it worked because except for a few people like Carvalho, nobody noticed this. But then I was happening to look at Python commits because this is very ironical because I'm a minority because I'm Italian, so I'm clearly a minority. Italians were considered almost black in the US in the 30s. So I'm, as an example of a minority, I was looking at the core commits, especially the Python ones, because I cannot read C++ and I hate C++, in order to understand better and maybe someday contribute something. And I stumbled upon this stuff and the dynamic of the thing, the guy coming in to try to push this kind of political crazy sociopathic bullshit, and the guys rushing in order to avoid the discussion. I consider that wrong, especially in the context in which this accident in isolation means nothing, really. This variable is useless. This is not important. But we live in a world where this kind of dynamic of people without any technical merit coming into a project, rushing in and just creating hostile takeovers based on this kind of craziness, it really happened in US-based projects. Like, for example, in Linux, you have Torvalds basically extromitted from the Linux Foundation because it was not agreeing about political virtue signaling. And then you have, it's a slightly different, but you have the Tor project decapitated, and Jack Applebaum radiated forever because of some Me Too kind of accusation from somebody that was clearly accusing a lot of random people, including developer Peter Todd and many other developers. So this is different. The Me Too movement is not the same stuff as the blacklist movement. The one is like sex-based or gender-based. The other one is race-based or ethnicity-based or melanin-based. But the point is the same. People without any technical merit rushing into an open source project and using this kind of absolutely inexistent offense in order to take over the project. So I'm not saying this is what's happening in Bitcoin Core, but what I said is exactly what you can read. It's basically just political signaling is creeping into Bitcoin Core development as well. We are not, as I said, if you go up, I said, there is nothing like a contributors banned because of wrong thinking. Sorry, wrong think. It was a typo, not wrong think. Not quotas of diversity, but it's still a bad precedence that is happening. So, like I said, many tweets I do, they just get ignored, and they are very controversial and they're very toxic, but people just don't care. This one blew up. And what happened is that then Ben Verrett, which is actually a contributor that did contribute on many software projects, like, for example, he contributed in Electrum, he contributed in Eclair. So Ben Verrett, this guy, just went to ask for the revert of this change, not even for political reasons, but he said, you know, guys, you changed the blacklist into block list, but block list sounds like a list of blocks, which in the context of Bitcoin, where there is an actual list of blocks, is actually a very bad decision. So in order to appease somebody with a political request, you made a terminologically very bad decision in the rush. So these guys asked to revert. And what happened is that a lot of people that was not on GitHub created GitHub accounts just to come in to support this revert, because they were concerned about the political origins or the dynamics, the power dynamics in general. So there was an unprecedented rush of people coming into GitHub to make a comment and stuff like that. So what really triggered me after this, for me, I mean, this was already ended. This was a closed case. But then a few Bitcoin developers, mostly John Newberry, they started to signal, Newberry basically signaled Verretor, Ben Verrett, as a troll and tried to get it banned from GitHub, his user, after his contribution was already praised and accepted by Vlad, so by the maintainer. So after his contribution that was based on a technical confusion of terms was accepted and praised, John Newberry trying to got it banned, which is, I think, is so paradoxical that it just blows my mind. So you're trying to include people, you are scared of exclusion. So in order to not exclude these hypothetical contributors that feel very offended by the normal word blacklist, you are actually extromating, trying to ban from GitHub actual contributors contributing to Electrum, contributing to Eclair and to many things, and you want them banned from the repository after they submit a very peaceful and very normal and actually accepted and praised revert. The change was not even reverted. It was made into another word, which was disabled. So it was not even aggressive. Ben behaved very well, and he was threatened, actually not threatened. Newberry just flagged him as a troll, trying to get it removed from the repository. So at this point, something that was started just like a random tweet about some tendency, about some trend, actually transformed completely. And now the point is, are you sure that we want people using inclusion as a term to actually mean exclusion of people that don't accept some very, very niche, mostly US-centric political obsession with melanin and race and stuff like that? So something that started very innocent in my regard, I was just looking around, I just found this. I didn't even ask to change it. I just tweeted out, this is quite concerning, this is not very clean. And then it became actual core contributors trying to ban people from contributing to Bitcoin.
Giacomo, I would love to get Jimmy's thoughts on this. I'm just going to jump in real quick.
Sure.
I know you hate C++, but C++ was like the one language I was actually able to code in, because that's what I learned when I was at university and stuff. And so John Newberry, he's Chaincode Labs, right?
Yep.
So that's, look, I'm not a developer. Like, I hate coding, and this is really bad. Like, that makes Chain Code Labs looks horrible. And I just learned this. Like, I wasn't up to date in the story, so thank you for giving me that, because I try to stay away from this insanity. And I don't know much about John Newberry. I just know he's a very respected core developer, but he just went down a shit ton of notches. That was just bad.
All right, I want to defend John a little bit because first of all, he's my friend, and second, I think I understand what he was doing there. So first, the change was triggered a lot of people because obviously they don't want an SJW takeover of Bitcoin, and that's totally understandable. I think everyone that saw that was like, okay, really, you think there's going to be somebody that's black that's not going to contribute because they saw the word blacklist, which is essentially what the whole thing was about. I do agree with Luke to some degree that the word blacklist actually wasn't very good for that particular thing that was being changed, because you know, the literal meaning of blacklist is disapproved things. It has some sort of like moral judgment aspect to it, and that's not what that variable was. It was more about testing. Okay, don't connect to these, not because they're necessarily evil, but because, you know, they might be already like redundant with something else or something like that. Also, this is completely not user facing. This is in a test script. It's a way to test something. So in a way, they did the right thing for the wrong reason, right? Like they should have changed this to something else. I think blocklist is also just as ambiguous as Ben pointed out. But the reason wasn't the reason given in that PR was probably bad, because they said, well, this might cause some black developer to not want to use, you know, contribute because it says blacklist instead of instead of something else. I don't think that really matters to developers, but I don't know. Who knows? The other thing about what happened with the revert was that, you know, there was a discussion, and basically they decided to put in disallowed, which is, I think, better than either blacklist or blocklist. But the thing that John was objecting to was Ben then went on to Go Ethereum and put in a pull request to change blacklist to people of you know, like list of color or something like that. It was clearly trollish, right? Like he was going into Go Ethereum, which is not a Bitcoin project. It's a good Ethereum project written in Go, basically. And he said, okay, you should change this, you know, thing from blacklist to go to, you know, list of color or whatever. So, and John was like, come on, man, this is the, you know, he kind of did this before, and he decided, you know, he's this is against GitHub community guidelines, and that's basically what he pointed out, and he flagged him. Now, was that aggressive? Probably. And, you know, like, given all of the flack that he was getting on Twitter, I kind of understand where he was coming from. Should he have flagged him and like basically antagonized somebody that's been contributing to the Bitcoin community? I don't think he should have. But that said, I understand what he was doing. He was basically saying, come on, guys, this is like obviously a trollish PR.
Oh, so he didn't flag him for the thing he did with Bitcoin. He flagged him for something he did
to Go Ethereum. Yeah.
In GitHub, but on a different project.
Now, how he found out about that, I don't know. I don't imagine he's watching Go Ethereum. I'm almost positive that's not the case. But he was probably watching some of the other stuff going on Twitter, because, as you guys know, this absolutely blew up over the weekend. So,
at least you've explained it. At least you've explained it, Jamie.
Because so I understand what he was doing. And the thing is, like, if you look at that PR and like how it went through, I know it looks bad, right? Because it looks like the reasoning given was, okay, if this turns off some developer that might want to contribute, you know, and it's very kind of SJW-y or whatever. But you have to understand, it's a small pull request, right? It's literally one line. You look at the line and you say, okay, well, whatever, it looks fine. And the guy that merged it is Marco Falchi, who's one of the I guess it's six maintainers of Bitcoin Core. Marco has literally the second most number of commits into Bitcoin Core because he's a maintainer. I think Vladimir Vanderlaan is number one. So like he's going through literally like 30 pull requests a day. He's in charge of the entire testing infrastructure and maintaining that and making sure that that comes in. That tends to get a lot of first-time contributors. It tends to get a lot of people that are trying to understand what's going on. And so you want to, this is the part of the Bitcoin code base where you want to be as inclusive as possible, because this is where all new contributors essentially enter the Bitcoin Core contribution game. You don't start by changing the proof of work algorithm or making an optimization to how the network messages are sent or something like that. That's not where you start. You almost always start in the testing. So he probably saw this and just said, okay, well, that looks fine. And it wasn't like a conspiracy to say, okay, well, let's rush this thing through so that everyone agrees with me on SJWism or whatever. It's more, he's got a lot of work to do. And and I appreciate him for this, because I know how much work it takes to actually review things and let things through. So to me, it wasn't necessarily like that. The two knacks in the repo were from people that actually hadn't really reviewed or committed anything into Bitcoin Core. It was people that had that seemed to be doing you look at the knacks and say, okay, well, why is this person knacking, and do they have enough community clout to really be able to knack? And I think he made that judgment and said, hey, you know what? These two people that knack, they don't have any commits to core. They don't, as far as he knew, probably didn't really review any other pull requests. So at that point, it's like, well, why is this being held up by two people that haven't contributed anything? So I'm not saying it's right. I'm just saying that's probably the thought process that went in. It wasn't a conspiracy to say, okay, let's rush this thing in and, make it like that. And I think there are, I don't think this is the hill to die on. I think there are much better places to do that. And honestly, if something, I don't think anything like this is going to happen again, just because of the stink that was made over the weekend. So in a sense, it's, I don't think we need to make a big deal about it going forward, if that makes sense.
Very comprehensive. Tony,
if I may, yeah, just a quick response. I know that I talked a lot about this, but it really, yeah, I mean, I'm directly interested, so I'd like to clarify my thought. I am especially triggered by inconsistency in this case and hypocrisy. So if you make, Jimmy, a thought experiment and you have two maintainers, one is Alice, and Alice is super strict. So if she sees Ben Verrett trolling on Ethereum, she will signal him because we are serious people, we don't do trolling stuff. And if she sees that there are two knacks that are not from actual contributor with past history, they will ignore the knacks because he's very, very strict, and he just reacts like that. Then there is a second maintainer, which is Bob, and he's very, very welcoming. He will just care that people don't get hurt in their feelings, so they will not really be nasty with anybody. They will be welcoming. And so the second person, Bob, they will accept even people logging for the first time in GitHub and saying, I'm concerned about this process because I care for Bitcoin and this is not right. And they will answer in a polite way, and they will not signal them and not ban them. The first guy, Alice, the first girl, Alice, she will probably signal, she will probably ignore the next, but she will also ignore the pull request because it was made by a first-time contributor about a political issue. So the point is that there is really an hypocrisy in which, in the name of inclusion about theoretical stuff, I will be actually very unwelcoming with people. I mean, the amount of elitism about people that usually, if you complain on Twitter, they will come to say, stop complaining on Twitter, create a GitHub account and make a PR. So if some guys makes a PR or another guys come to comment, now it's suddenly, oh, this is an attack. You're not supposed to be on GitHub discussing with me. I mean, it's not wrong in itself. It's just inconsistent. Is a clear double standards. If you come to propose SJW bullshit, then we have to be welcoming. If you come to say that you are not interested in American SJW bullshit, then we become very strict about reviewing your past history, looking if you're trolling some other project. I mean, choose one of the two.
So I would say that in this case, there were actually both pull requests were merged, right? So the original one and Ben's. The part where they were sort of attacking Ben was in Go Ethereum, which isn't. It's a different project with different maintainers. So like Alice would be from Go Ethereum and Bob would be from Bitcoin Core. Bitcoin Core just tends to be like, you have to understand, most of these core devs are absolute sweethearts, right? Like they're very, very nice people. And they have a bad reputation from like the scaling wars of 2017 or whatever. But if you talk to them or if you interact with them on GitHub or whatever, they are the most generous people. They're like very inclusive, very nice people. And they'll bend over backwards to accommodate you as much as possible, especially the maintainers. People like Vladimir and Marco and
Vladimir.
Michael,
I mean, Vladimir actually with Ben, Vladimir
Mm-hmm.
was absolutely correct. Vladimir interacted nicely.
Hello?
And he, do you hear me?
Yeah, we
Yeah.
hear you.
Oh,
Okay.
crap.
And with Vladimir himself, I have nothing to argue about his behavior. He actually welcomed the pull request and he helped improve it because as you said, Blacklist was not a happy choice. So sorry guys if I took a lot of time about this. I think I have to go now. So
No, you have to go. Hey, well, our next topic is just Lightning and how like the cumulative amount of Bitcoin locked up in the Lightning network has reached a new all-time high. Just general thoughts on Lightning real quick, and then we'll let you go.
I have a bet about this with Eric Wall. I have a bet that in 6 months, the amount of value in Lightning will be actually higher than the amount of Ethereum second layer solution. So it's a very risky bet. It's a 1,000 euro equivalent. But I think that I'm very optimistic about Lightning and very pessimistic about Ethereum second layers. So I'm quite confident about this. I think that the amount of Bitcoins should be measured in purchasing power and not necessarily in nominal Bitcoin value, because that's very connected with the price. Since Lightning is a hot wallet, if the US dollar amount of your US dollar value of your Bitcoin in a Lightning channel goes up twice, you will probably close it and open a smaller one. Maybe not always, but I will do that. I will not keep $500,000 in Lightning. So if it goes up 10 times, I will probably close some channels. So the number of Bitcoin is influenced by the price dynamics. And so it's not a coincidence that I think that the number of Bitcoin in Lightning goes up when the price goes down and vice versa. That says...
Joe, I'm confused though, but Eric Wall is like a huge Ethereum troll. Why is he taking a bet to support Ethereum?
Well, he's ambiguous about that. He likes to try to be the guy that will understand and mediate between both communities. So Eric is very actually ambiguous about that. Most of the Ethereum people consider him a friend and an ally, but he's mostly he's half trolling, half still manning people position, and half trying to be the devil's advocate because he likes to be contrarian. It's a little bit like Udi Wertmeier. I mean, they like to be contrarian even against some kind of evidence. But it's funny. It's interesting to interact with them.
Thank you so much for joining us, Giacomo. Great insights. Thank you for the comprehensive explanations.
Thank you, John. Bye.
Thanks, Giacomo. Gotta have you on again soon.
Yeah. All right, so yeah, this story, total value on Bitcoin's Lightning Network sets another record high amid market rally. Bitcoin's Lightning Network set a record high Monday as total capacity held in the protocol's payment channels, sometimes referred to as total value locked, reached 12.4 million. Jimmy, you want to weigh on these developments?
I don't think this is too much of a surprise. I suspect that LND's support for Wumbo probably has something to do with it. Wumbo is basically fat channels, or channels with a lot more Bitcoin that are allowed to be locked in them. It was for a long time limited because they didn't want people to have too much locked into Lightning. But with Wumbo channels, you can do that. I suspect that that's a part of it. But yeah, I mean, well, there's also lots of new applications. You know, Strike by Strike with Jack Mallers and a bunch of other Lightning apps that are gaining prominence. So you know, it continues to grow. We'll see where it goes.
Hey, Tone, so the markets in Bitcoin are going down, but this appears to be going up. What's going on?
Yeah, well, this is good. I need to help contribute. I need to help Giacomo win the bet. So I'm gonna have my. He's got 6 more months to go, and that's definitely enough time for me to get my Lightning game on. And at Unconfiscatable, we do plan to have like a 1-hour introduction to Lightning, like help people set up wallets. So that is something we're trying to do at Unconfiscatable. Just teach people how to use hardware wallets, how to use Bitcoin transactions safely. And also teach people how to use Lightning, because I think next year it's going to be very important for you to use Lightning. Bitcoin transactions have been fast and cheap for the last few years, and that's going to end very, very soon. Because if the price of Bitcoin goes up past 20,000, get ready for $5-10 fees. SegWit will not save you this time, so you will have to use Lightning for small transactions.
Okay, that's a good segue into the mempool, taking a look at the transactions. Tell us what's going on, Jimmy.
Well, as usual, the weekend means that nobody really transacts. So you had 1 sat per byte transactions basically clear all weekend. And that includes, of course, yesterday, which was Labor Day here in the United States. Things are starting to get a little bit more expensive, but not very much. 5 or 6 will get you in the maybe 7 or 8 will get you in the next block. Pretty much right now. I don't think this will last. You know, you'll start seeing higher fees as the day goes on. Probably some tomorrow, and you know, just the normal pattern of the business day, at least in the US, tends to cause a rise in fees, and then it'll start dipping towards the evening and clear a lot of transactions.
Okay, great. And we want to remind people to take a look at programmingbitcoin.com, where you can buy a copy of Jimmy's book, Learn How to Program Bitcoin from Scratch, learn how to program a Bitcoin library with this hands-on guide from one of the leading teachers on Bitcoin and Bitcoin programming. Author Jimmy Song shows you the basics, including the math, blocks, network, and transactions behind this popular cryptocurrency and its blockchain payment system. You'll also learn how simplified payment verification and how proof of work works. Thank you very much, Jimmy. And taking a look at the markets, I know some of you out there, some viewers are asking about when this price analysis would happen, and it's happening right now. We see the markets tanking, tech stocks going down, NASDAQ falling the most, and Bitcoin also going down with it. What's going on, Tom?
All right, let's take a quick peek. I may or may not do another show later today. We will see specifically on price. I actually want to start with the S&P 500 because I did do a show yesterday, and I said that, hey, it's Monday, futures markets are trading. They were trading up, but it didn't matter because today is the actual trading day. And you see this giant gap on the S&P 500. You also see how it tops with the MRI, an indicator I am planning to release by end of month. This is a good area of support. We have the 50-period moving average along with the support line from the MRI. They're both coming in at this $3,300 area. Now, we did just make a new low, and I don't know if the low is in. It doesn't feel like it. It doesn't feel like today is going to bounce the price. It can. This huge gap at the top will, of course, be closing eventually because I do think the market will trend higher. But Right now, people asked early on in the chat, will we have a 10 a.m. reversal? We did, but this last 10 minutes has drove us back down. And I think this is problematic. And Bitcoin also took a big dive. Bitcoin was rising last night and it fell about 300 points this morning. So if we go to the 4-hour chart, here is Bitcoin falling from 10,000. Wow, it was over 400, 10,450. And just in about an 8-hour span, maybe 12-hour span, went all the way down and once again went under 10,000. I think this flirting with 10,000 is not good. I think there is a higher probability of dropping down to this $9,000 area as this arrow that I drew yesterday when I did this video. But once again, we are very correlated with the S&P 500. If the S&P 500 continues to pull back later this week, then it's very likely Bitcoin is going to fall down to 9. Here's the good news, and this is what I've mentioned weeks, if not a month plus ago as well. A catastrophe in the S&P 500 should not send Bitcoin to, I'm just going to look at the weekly NASDAQ here. So the NASDAQ is all the way up. So I can certainly see NASDAQ falling, crashing back down to the February swing high. Now the S&P, if I go to the weekly chart, it's probably already below the February swing high. It is. It's already below that. Wow. So the S&P had a weekly MRI in line with the daily MRI. Damn, no wonder we took such a nosedive down. I was just, again, busy traveling with BitBlock Boom. So I totally missed it. I totally missed the convergence of the daily MRI with the weekly MRI. Those that caught it, I'm sure did well. We do have a notification Telegram channel that probably that should have notified you as well if you pay attention to it. Don't depend on me. This is why those that trade this should have access to the indicator. So I'm not surprised it's pulling back. Now, even if the S&P crashes, I don't expect Bitcoin to crash. Like, I don't expect Bitcoin to go to new lows. I also don't expect the market to go to new lows. I mean, that would be a huge crash. I think the low for Bitcoin is in. I think we are in a bull market. And I think the best place to buy your dip would be approximately 9,000 and then 7,000. So I have my limit orders all around the $9,000 area. I already bought in a little bit on Friday before markets closed because, I don't know what's going to happen in the future. But the majority, I'll probably get in at 9. And if not, I'll definitely get in way more at 7. That's what I'm looking at. I'm still looking at this as a little bit of a dip. I have my bet going. Someone gave me a script. Thank you so much for that. Tone's bet. And you can see that I am down, lost another day yesterday. So I am down 50 days, 50 out of 90 days. And we have 115 days to go. So 40, if 40 out of the next 115 are above 10,000, then I lose my bet. I think it's going to be close. I think if we go down to that $9,000 area, we can stay there for up to a month or two, and that keeps us in this $10,000 vicinity. So that's basically my outlook. Gold is was dropping below a very critical line. It's hanging in there. You can see how similar gold looks with Bitcoin. Bitcoin is flirting with 10,000 and gold is flirting with 1925. And 10,000 is a big round number, and 1925 was the 2011 all-time high. So this also looks like a chart that's ready to pull back a little bit further. The one stock
that also looks like a downward triangle. Like,
it is.
Seriously,
It is definitely a descending triangle. I've mentioned it on prior podcasts. I just have not drawn it, but this is very clearly a descending triangle at this 1925, which will take us down to approximately this blue line of 1750, which is probably a really good buy the dip for gold. The one stock I want to show is Tesla. I said on prior podcasts that the first level of support for Tesla was 325, around 325, the prior swing high. This line is actually at 330, around 330, 335. Hit this line perfectly. And I don't know, I kind of missed my Tesla trade. I don't know if I'm going to rush into it. I may just admit that I missed it. I would like to be in Tesla. I think I've said it many years ago. Tesla, I expect it to be at some point in the future the biggest company we have by market cap. It'll get there. I believe it'll get there one day. But we all know that it's a little bit overvalued at current prices for what they're doing currently. I would love to see it fall down to the $200 area, which I would definitely buy into at 200, which at 5-for-1 stock split is still a $1,000 Tesla stock if you're looking at it 2 weeks ago. Right here, if this bounce takes us back to the upside, then I'm once again not in the Tesla trade. I was telling my friends to get in at 325. I don't know if they got in at 335 this morning. Maybe, maybe not. Depends. I probably would have missed it. I would have had my orders at under 330. I would have missed it by about $5, but I didn't have them anyway because I've been doing the show all morning. I'm still going to be watching Tesla. And the moment I see it go under this area here, under 300, I'm probably just going to stay patient and wait for lower prices. So that's the one stock I'm eyeing. Technically, it has pulled back. Historically, this is probably enough. And if the market rebounds and the overall market isn't going much lower, Tesla will probably go to new all-time highs. If people aren't investing in Tesla for tomorrow, they're investing in Tesla for the next 10 years. So it's impossible to say if it's undervalued, even at the current price. All right, that's pretty much it for me. Thank you guys for watching. And I'll hand it back off to Christine.
Yeah. Thank you very much, Tone, for that analysis. There were some really interesting comments or questions I saw out there. One asking about your thoughts on the company BlockFi, promising 8.6% returns. Another one asking whether or not with the cost of mining, is that making Bitcoin more decentralized? Any quick thoughts on that?
Sure, I'll jump in first. I don't know much about BlockFi. If they're offering you an 8% annual return, that's not a big deal, considering there is DeFi offering you an 80% weekly return. So in the crypto space, an 8% annual return is probably reasonable, very reasonable, because there are risks. You are locking up your Bitcoin. So there's definitely risks there. I think an 8% return is reasonable. Like, I wouldn't risk my Bitcoin for an 8% return. But I don't know much about BlockFi. I'm not into crypto lending. I'm sorry, it's not revolutionary. There's nothing revolutionary about crypto lending. Like it's neat that it exists. And if I was to do it, I would go with, a reputable company where at least the people are Bitcoiners and I know the people, which would be On-Chain Capital. It would be like the only company that I believe does lending in crypto that I would actually trust with that lending. Now, that doesn't mean I'm going to go and do it. And that doesn't mean I'm suggesting you to go and do it. But if you are interested in crypto lending, Jimmy may give me a little more insight on that. But those are the only guys that I actually kind of know and like, and I, believe in that they have the same vision of Bitcoin that I do. And the other question was the Bitcoin mining. I think it's fine. I mean, there was that article saying it costs probably no more than $5,000 to mine a Bitcoin right now if you're an efficient miner. So you got plenty of room.
Yeah, as far as BlockFi is concerned, I'm always a little suspicious because I'm wondering who they're lending to, who's actually wanting to borrow at 8-9% when you can get fiat money for like 1 or 2%. So I'm always kind of like, okay, why would you do that, and how do they get you that yield? And if you don't know where the yield is coming from, usually you are the yield. So they're probably, it's possible that they're gambling with your money and hoping that they can return you 8% and go from there. So unless I know exactly where that money's coming from, I'm usually pretty skeptical. And if it is lending, then you better be sure that that it's secured lending and that the loan to value ratio isn't too high. As far as mining, I mean, it's profitable, like Tone said. So if it's profitable, then it's possible to make money on it. So yeah, I mean,
right. Like I would be concerned about mining if the price of Bitcoin goes below $5,000 and stays there for at least 2 to 3 months. I would start to get concerned.
I wouldn't, because then a lot of people would drop out, and then the mining difficulty adjustment algorithm will kick in.
I know, but it would still be concerning. But I don't think we'll get there. I don't think we're gonna spend 3 months below 5,000. So it's not.
Well,
really...
the thing is, even if that happens, then what'll happen is a lot of the marginal players will get bankrupt, and then the people that are able to do it at a profit, they'll grow even more. So in a way, like, it's a very efficient market. It'll make for newer players that are more efficient and so on. It's the creative destruction of market economics.
It is, but now we have to deal with mining centralization and the small miners getting destroyed, like the small farmer. So I would rather not deal with any of that. And which I don't think we will. I think if you run a reasonable operation, your Bitcoin shouldn't cost more than 7,000 to mine, and I don't think we're going to go far below that.
I mean, there's tons of startups. Even at BitBlock Boomtone, there were like at least 5 different people that I met that were doing something with natural gas, flaring for stuff.
I met people that were doing that 5 years ago and they didn't get anywhere. So it doesn't like
no, I mean, some of them are making money. So, I mean, there's something happening. So we'll see where it goes. But whenever you have new entrant, you need the price to go high so that new entrants come into the market. You also need the price to go low so that you kick out anybody that's inefficient. And then, that cycle is what kind of makes a lot of the space go forward, if you will.
All right. Thank you so much, you guys. Thank you, Jimmy, for your insights. Jimmy is our guru on all things tech and author of Programming Bitcoin. Tone, we're going to check out his conference, Unconfiscatable. It ended the last conference before the pandemic, and now it's going to be hopefully back in Las Vegas in April. And I'm Christine, your journalist and host of this edition of Bitcoin Brief. Thanks for joining us, guys.
Thanks. Oh yeah, Fiat Dylan, the song is forgot about that.
Bye, guys.